Hey guys, my name is Mike Boyd, this is The Money Flare, and in today's video I want to go over what's been going on with gold. If you've seen any of my previous videos, or you just follow the news or track your monthly expenses, then it must be no surprise to you that inflation is here in a big way. But something that has had a lot of people confused about is the price action of gold. The gold price peaked in August 2020 and it's been on a steady decline ever since, all while we've seen more and more headlines of rising inflation. And many people consider gold a store of value and a good hedge against inflation, and so it's understandable to wonder why the price of gold hasn't been shooting higher. Well, I want to cover that in this video and go over why gold isn't always the best investment during times of inflation, unlike what most investors believe. Now, before I get into bashing on gold, I want to make an important disclaimer. I'm someone who really values gold as an important part of a portfolio. I actually own physical gold in a vault, right? So not many people can actually say that. So I'm a big fan of gold, but I'm also not a perma bull. I'm not a perma anything. So I don't believe that you should just hold any asset no matter what. My finance journey actually started with a deep study and reflection on the nature of money and what acted as money in the past, how money works today, and how our money should work. What's the best form of money and all that. And so in that reflection, I went down the Austrian economics rabbit hole, which argues for a sound money like gold, sort of a hard money of limited supply and high stock to flow that can't be easily inflated like our current fiat money system. So I just want to mention early on that I think I truly understand the benefits of gold, especially in a portfolio, how it can truly play an important role in a well-diversified portfolio over many years. It's proven its use if you look at the past 100 years. But with that being said, I'm also someone who believes in evidence-based investing, rebalancing my portfolio for the environment that I think that we're in. So that means not just always owning the same allocation in an asset. I believe in changing the makeup of a portfolio depending on the economic situation that we're in, the overall economic cycle. And over the past 8 or 10 months, I haven't been as positive on gold as I was previously. I don't think the environment that we're in right now is one where gold will outperform. That's why I've had a much smaller allocation to gold than what I had in 2019 and much of 2020. And the price of gold is further proof to me that my view isn't wrong. The reality is that ever since the peak last year, the narrative supporting an increasing gold price has figuratively and literally broken. First, from a technical standpoint, with the recent sell-off over the past few days, the trend line established in May 2019 broke on Monday last week. And 2019 was when we were approaching what seemed to be the end of our previous economic cycle. The yield curve had inverted, world trade was decreasing, bond yields were dropping, and gold was rallying. This trend line had acted as support during the March 2020 sell-off, as well as the sell-off earlier this year in March 2021. Both times, gold bounced back pretty quickly. But now that trend line has been broken, and while it appears gold may have reclaimed it, it now sits at an important support and or resistance zone of 1780. We'll see what happens going forward, but I wouldn't be surprised to see gold fall further. Many gold bugs have been dismissing this recent sell-off as just price manipulation because gold sold off outside of regular trading hours late on a Sunday night when there's very little volume. And what happened was someone dumped a whole bunch of futures contracts, and a large order during very low volume is almost a guarantee of price collapsing. And many would argue that this is clearly price manipulation. But I'm not too convinced, especially considering the fact that some of the most die-hard gold bugs like Peter Schiff have been claiming price manipulation for years now. Some of it has been true, I will give them that. Many banks have been caught rigging the gold market, but I don't believe in calling all sell-offs in gold price manipulation. What could be just as likely is that a portfolio manager or a trader was liquidated of their gold position. There could have been some stop-loss selling. In fact, if you look at the price chart a bit closer, you'll see that gold broke that long-term trend line early during the day on Friday, and it stayed below all day. The Sunday night sell-off could have been triggered by a bunch of traders who set their stop loss right below that trend line. And a stop loss is just when you set rules for a position, and if the price goes below a certain value, then you'll automatically buy or sell. And so it's not too far-fetched to imagine that many investors put their stop losses right around this important area. The price of gold rallied near the end of the week when the University of Michigan Consumer Sentiment Survey released showing a drop in consumer confidence. But I wouldn't put too much emphasis on a survey like this, especially when the drop in confidence seems to be related to the Delta variant, which most of the data suggests is currently peaking. And it only included 439 households. So I wouldn't be really building an investment thesis around this survey alone, and I'm doubtful that gold will continue to hold above the trend line. When I try to gauge where we are in the current economic cycle, one of the many indicators that I use is the price action of gold, because I think it sends an important market signal. Gold investors are generally smart, and as I mentioned before, gold started to really rally in price as we were nearing the end of our previous cycle in late 2019. And gold, along with bonds, were anticipating a potential recession, the Fed lowering interest rates, doing quantitative easing, and increasing the money supply. All that came to pass, and COVID being the catalyst that put us into recession couldn't really be predicted by anyone. But at the end of the day, the price of gold and gold investors were right in predicting the end of the cycle. It's important to remember that gold, along with bonds, are primarily risk-off trades, while stocks are risk-on. That's why we saw gold and silver and other precious metals have a nice rally following the COVID crisis. The narrative of central bank money printing and ballooning debt is what brought so much interest in this asset class, considering that gold has historically been viewed as a good inflation hedge. But as good as the narrative sounds, you have to admit that gold and silver have been some of the absolute worst investments over the past year. And so what gives? As I said before, I think the narrative behind the gold price has broken down. People have invested in gold because they think that the Federal Reserve will continue to print money, continue to do quantitative easing, and keep interest rates low, leading to high inflation. They also believe that growth will stay low like it has over the past 10 years. But I think that narrative is wrong, and every positive economic news that we've seen is another nail in gold's coffin. The reality is that growth has been very strong and looks to stay strong for the time being, and the Federal Reserve has been handling monetary policy pretty well, and they're starting to talk about tapering their QE and potentially raising interest rates by around 2023. And they may actually pull it off. They haven't given me any reason to doubt them over the past year. And if you look at the last time the Fed talked about tapering QE in 2013, you'll notice that gold didn't like it very much. And so the price action over the past year, I think, has been a very strong indicator that the Federal Reserve has been handling the post-COVID situation really well, and that we're still in a strong economic recovery that has legs. We've had a lot of inflation, that's true, but we've also had very strong growth. And as I've been saying many times before, the situation that we're in right now is so much better than late 2019 and early 2020. We're at the beginning of a new economic cycle, not at the end of one. It's also not the same situation as the 1970s with high inflation and low growth, so stagflation. So it's not at all the same situation. Otherwise, we would be seeing gold being one of the best performing assets, not the worst. I think this brings up a few important lessons. Firstly, on what environments gold actually does best in. It's not true that gold is a pure inflation hedge, as much as the gold bugs would like you to believe. Gold doesn't have a yield, right? So there's no cash flows, no dividends. It actually has a negative yield because you have to physically store it for a cost. And so gold truly shines in an environment where we have inflation, but there's also very little growth and very low real yields. So very few options for investors to park their cash in a relatively safe asset and protect themselves from inflation. But in an environment of high inflation and high growth like what we see now, where in particular the cyclical companies who have pricing power and can successfully pass down the increasing costs of inflation to customers, those companies which can truly thrive and provide fantastic cash flows in a growing economic environment, they become very appealing to investors. And yes, they have more risk than a precious metal like gold, but at the beginning of a new economic cycle, many investors would happily bet on a copper miner or a steel producer or a bank and accept the increased risk for the potential increased reward. So gold isn't a pure inflation hedge. It's meant to preserve wealth over time and to protect from the long-term effects of currency debasement. It also performs well during times of uncertainty, whether it's economic or political uncertainty. It's a form of money at the end of the day, and so you shouldn't expect money to outperform a cash-flowing company when times are good. Only when times are bad and growth is low and inflation is high should you expect gold to drastically outperform other assets. Every other time, it just simply maintains purchasing power. Secondly, I think this is an example of how it's so important to question the commonly believed narratives that you see in the investing landscape, especially on social media and places like YouTube. So for example, when you start to see non-finance YouTubers start to post charts of M2 money supply and getting sponsored by companies like Noble Gold, talking about protecting your wealth from inflation, maybe you're in a crowded trade, and maybe that's not the best place to be. I remember watching videos last year where people were literally saying that gold couldn't go down in that environment. So if we have inflation, for example, then gold will go up. But if we have deflation caused by COVID, then gold will still go up. And so when something sounds too good to be true, then it usually is, and that's what happened with gold. You don't even have to be super macro aware to understand that the narrative was getting overblown. I'm following markets all the time, so I was able to see that growth was looking very good and the Fed was handling the situation rather well. And so that kept me away from adding more to my gold position. But if you just look at the gold price and see how it kept making lower highs following the peak, and it kept selling off when there was good economic news, then you could use that signal to understand that maybe the gold narrative was getting a bit overblown. It wasn't wrong, right? Let me get that straight, because we had a crisis and gold and silver went up a lot, but the price got a little too hot and it was time to maybe take some profits when people started talking about hyperinflation and $5,000 gold. So always question the mainstream narratives because they're usually wrong. Lastly, I'd like to go over the difference between Bitcoin and gold because a lot of crypto people like to show how Bitcoin is overtaking gold, right? So during the past year when gold has gone down, Bitcoin has been one of the best performing assets, and so many people like to claim that the role of gold as an inflation hedge is simply being replaced by Bitcoin, and that's why gold hasn't gone up as much. But I don't believe that at all, because I see Bitcoin and gold as very different assets. Bitcoin is much more an emerging technology, and so its price going up, I think, is more correlated to its increasing adoption as a technology. And that's not the same as gold. So I don't think Bitcoin is replacing gold at all. I see a use for both existing simultaneously, and so I don't think the price signal of gold can be dismissed as just simply, well, Bitcoin is replacing it. They're different assets, similar in a lot of ways, but fundamentally different. And while I expect the price of gold to potentially fall further, I think Bitcoin can definitely continue to surge higher in the medium term. So that's what's been going on with gold, and I hope I was able to clear up why the price has been so dead lately. And please keep in mind that I believe everyone should have some gold in their portfolio, so I'm not saying don't own any gold right now, I just wouldn't own that much, and I've kept my allocation lower than usual for that very reason. And so we'll see how things go. I expect gold to either go sideways or go down in the short to medium term, but I definitely could be wrong, and maybe I'm too confident on growth staying strong. So I'll reevaluate my thesis if the data or the market says otherwise. But for now, the signal is still pointing towards reflation, I think. I picked on gold today, but what I said earlier applies to any asset. Always question the mainstream narratives that you hear and look to the market to tell you if that narrative is correct. Stick with the trends, don't fight the market because it's guaranteed to lose you money in the long run. So that's it for me. Thank you guys as always for watching. Please be sure to like and subscribe and stay safe in these crazy markets. I'll see you at the next video.